Hello and welcome to this overview video of Misys Business Intelligence. This is one of a series in which we work through some scenarios in order to show you how Misys Business Intelligence can help you in the day-to-day management of your bank. Today we're going to have a look at credit risk analysis. In this scenario, I'm going to adopt the role of the Chief Risk Officer, which means I'm going to have access to all the risk information across the bank. Other colleagues wouldn't, of course. They would only have access based on the requirement of their specific roles, and that will be managed within Misys Business Intelligence. So we're going to have a look at some of the sample dashboards and reports that are available out of the box within Misys Business Intelligence. We can see that I've built this dashboard around some of the key dimensions available to me, so I can show delinquency as a percentage of the total lending portfolio, by business unit, by client segment, by geography, and by product type. An obvious hotspot on the map is London, so we're going to drill in there and have a look at where the problems are. For a couple of reasons, I'm going to want to drill into the London region. For one thing, it's an obvious hotspot on the map, but it also has a high proportion of delinquency of over 150 days past due. Clicking on the map gets me through to the delinquency analysis report for London. In this I can have a look at the performance of all the products over the last few months and have a look at the delinquent amount per product per period. I can also have a look at the spread by percentage across that same period and product type. Looking at this report, I can see that the spikes are generally caused by secured lending, so I'm going to click on that so I can drill in a little bit further. On doing that, I can see that it's the 10-year variable rate mortgage which has caused this month's spike, and indeed the spike a few months ago. Looking at the table underneath, I can also see that a large proportion of this delinquent debt is in the 150 plus days past due bucket. This makes me think that I want to have a look at the charge-offs to see if we've had a similar problem with this product type in writing off our debt. Similar to the delinquency dashboard, I've created this charge-off dashboard around the dimensions which make most sense to me. So I can see charge-offs by business unit, by product type, by region, and by customer segment, as well as exposure in some of these ways as well. Once again, London shows up as a hotspot, so I'm going to drill down as I did before, but access the charge-off analysis report. Similar to the delinquency report for London, I can see the performance of many products spread across the previous year. Underneath, the table shows me the percentage of the delinquent debt that has been written off, and I can actually drill down further, and it's clear from looking at this that the secured lending is once again in bad shape. Looking at the 10-year variable rate mortgage specifically, we can see that once again we've had significant problems in the 150 plus days past due, where a high proportion of our delinquent debt in this bucket has been written off. So if we're having problems with this product in the London region, I clearly want to see if there are more to follow, so it will be relevant to have a look at the total exposure to this product within London. I can see from this report that we've been steadily putting business on, which in itself is a good thing, but have we been putting on the right sort of business? Looking at the table below, I can also see that there is too high a proportion of our total exposure within a delinquency bucket. As part of a program to rectify this, if I wanted to, I could actually apply a threshold, so I got an alert when this value was changing. If I wanted to, I could pick some of the ratios of total exposure by delinquent debt bucket and set a threshold so I'd receive specific alerts every time that threshold was breached. This way I could monitor movement into delinquency month by month. However, my priority now is to prevent new delinquency, so I'm going to have a look at this portfolio originations via the origination dashboard which I've created. This dashboard shows that London produces the highest number of loan originations, as you can see from the map. And looking at the pie chart, we can also see that a big proportion of these are mortgage products. So let's have a look at the credit quality of these new loans. So clicking through, we can have a look at loan originations by customer credit rating. We can look at that either by total amount or by changing the stacked bar to a percentage bar by overall percentage of money lent. By looking at this percentage bar, we can see that London has a high proportion of poor quality ratings, and as I know there is a large amount of new lending out of London, I'm clearly concerned. Having done this work, I want to share my findings with others, so I'm going to send an email to the head of the London branch, attaching the report and including a link, and also copying it to my own inbox. This way we can actually start our conversation from the information that I found and work out how to tackle this going forward. I can use various tools within Misys Business Intelligence, such as thresholds, alerts, create specific reports or dashboards that I want to monitor going forwards, so that we can start to get on top of this delinquent debt problem. We've shown just one scenario within Misys Business Intelligence which looks at some dashboards and some reports as examples in order to give you an overview of the capability. I hope you found this scenario that we run through a useful way to get an idea of how Misys Business Intelligence can help you manage your business from a credit risk perspective. We've shown just some dashboards which are available out of the box, but clearly there are other reports and dashboards which can be tailored to your bank's needs.